as you guys know, my name's Frank, and I got a $6 million property portfolio. But I didn't just get a $6 million property portfolio because of it just naturally fell out of the sky. It's because of doing the right research. And today I got a special guest on who's helped us with finding these locations, who is the CEO or the founder of Suburb Finder, Gilbert. Welcome to the Invest in You podcast. And I want to say thank you as well for giving us the right information and data to help make informed decisions for ourselves and also our clients.
No, thank you for having me.
So I guess today is good to have you on, I think, to share, I guess, your story, but also about, why you started Suburb Finder and then kind of relate about how you go about identifying hotspots. So I think we'll just peel it at the very beginning. I guess, who is Gilbert? And I guess, what made you go down this path of starting a data company helping people find hotspots?
Good question. Well, originally, me and my wife were from the Philippines. So we moved here 2011 as an independent skilled migrant. And 2015, we got invited. So we work our asses off, corporate ladder and all. My background is on the technical side, on programming, but I'm mostly focused on search engine optimization for, I'd say, since 2005, so 2 decades now, and analyzing data, and until up to now, still doing that, analyzing data. But 2015, we attended a birthday party. One of my wife's cousins, and we overheard them talking about investment property. At that time, we don't have any idea. But what triggered was they're just in late 20s during that time. So they're boyfriend, girlfriend at that time, and they already have 10 properties combined.
Oh, amazing.
And I was like, how the hell are they doing this, right? Not even in their 30s yet, and they have 5 each. It's like, are we doing anything wrong? Right?
Start scratching your head.
Yeah. So that's the time I got curious, both me and my wife, but I'm the one who really got into it. Right? Because we both love numbers, being into data. My wife's an accountant. So I started research, enrolled to a property course, 2 of them, and being on the technical side and analyzing data, I've used whatever online tool that we have during that time. And different tools, different strengths, and all of them are good. But because how I want to crunch the numbers, being an analytical mind, there's no or tools back then that let me massage the data on how I want to play around with it. So I just get all of that from different sources and put them into one spreadsheet during that time. And that's how it started.
And then from there, is that when you went out and started investing and off your own
Yes.
backed research,
Yes.
you found that it worked? And
Yes, so from there, it worked for us, and we were able to help a couple of friends and relatives as well. And we thought like, wow, it worked again. Right? It worked for us. Maybe it'll work for them. And surprisingly, it worked for them. And they're the ones who pushed us to make something out of it. Because for them, they said, hey guys, you guys were able to help us. Probably there are other people there who's having the same issues or problems. Then maybe you can do something about it. Make something about what you have and able to help them as well.
And so what year was Suburb Finder created or established?
Well, we soft launched online 2019. So I think that was the COVID.
6-7 years ago, yeah.
Start of COVID or
Yeah.
peak?
No,
Or-
COVID was 2020 March, I think.
2020.
Yeah.
So about
Oh, 2019, you started to hear it at the end of the year.
Yeah.
I remember. And I remember 29, no, what was it, March 2020. Yeah, that's when we were in the lockdown.
yeah. So that was the first iteration that we have, and it's like the proof of concept. So we continue to um, revise it, make it better until we got to the point of 2020, late 2020 or early 2021. That's the time we fully launched it. But prior to that, there are already a couple of BAs who already using the data, the
Yeah.
platform, even up to now.
Awesome.
They're still there.
And so I know you've done things quite different and creative because with your own portfolio, but that you started to go down a different route of doing the traditional way of investing in property. You've done a bit of a different way. Can you explain kind of because you were telling me before off camera?
I'd consider myself, I think, a bit of on the proactive side, right? Because I realize if buy and hold is awesome, don't get me wrong, but if you can do something about it, if you can stack up different strategies when you're buying, I realized that I was like, okay, you can do that, right? So I was like, that's a good way to do that. And that's the time that I got introduced as well into the rooming house or shared accommodation strategy.
What attracted you to go down that path of going with that type of asset selection?
Good question. As I've said, I'm definitely the cash flow, right? Because imagine if you have a 5-bedroom house, normally on a traditional rent, 5, 7 or 800, right? And if it's a rooming house, then you can rent each room for like 250. Then you're doubling
Your cash flow.
your cash flow. But of course, it goes with additional responsibilities as well, right?
Yeah.
Additional headaches. But those are manageable as long as you know how to approach it. And you need to comply with different council requirements. And as I've said, me and my wife, we are migrants. When you move to a different country, to a different country, you don't buy property right away, right? So you rent a safe and affordable accommodation as much as possible. And normally, normally it's just one member of the family that migrates first, right? And then after that, when that person gets a job or gets a regular job already, stable income, that's the time family gets the family here. So that's the reason why I thought, this is really interesting because aside from you're getting cash flow already on steroids, you're also helping the community by providing a safe and affordable accommodation. Right?
I like the approach.
Yeah.
And how's you got a few now in the property portfolio that you're kind of doing some development and things?
Well,
happening at the moment?
hopefully the one finishes soon, right? But the one that I mentioned to you before when we met is first, not development, but the first active project that me and my wife did is we put a development approval. We applied for a development approval for 24-room studio apartment or new generation boarding house. It's like a studio apartment because same as this big in your studio here, but with its own ensuite and kitchenette, like fully self-contained.
Yeah.
Yeah.
So that then the people won't interact with each other. They can just stick in their room or
They can just stick in their
not-
room, and they also have their own communal area
Yep.
like a lounge. There's a main kitchen as well. Yeah.
And financing, kind of jumping into that, what's the financing side of things look like when you go for a rooming house deal,
It's commercial.
commercial?
Yeah. So it's 60-40 LVR.
Yep.
40% deposit. Yeah.
Yeah, so high deposit.
That's
So a lot
why
of capital.
not a lot of people are. It's a good strategy, but because of that, not a lot of people are doing it.
Yeah. Once you get it, sorted, then of course it makes sense. Numbers all make sense.
Yeah,
Doesn't-
but I think it's not something that you'll do on your as your first investment.
Yeah, definitely. Yeah, of course, definitely. So you've come from the Philippines 2011.
2011, yeah.
Come here, then you start hearing people talk about property. Got 10 properties as a couple. You're like, stuff this, I'm going to start doing this. You go there, you started your own research on spreadsheets. Now you got Suburb Finder, which is a fully fledged program. What was the journey like just to go through that? That's, a lot of people can say they've come from another country and, I'm assuming as well you had to learn the language, or you speak English before
Well, back home, it's second language. Well, second language is English aside from our local language. And because it's really more of a Western or more of an American country.
Yeah.
Yeah, that's
But
why.
you've come to Australia and you've done all these amazing things. Do you look back and go, geez, what a journey?
Yes, it is. And it's not as easy as it was. Of course, you learn along the way. You learn the process. There are things that didn't go well, but I wouldn't change a thing because I learned a lot from it. Yeah.
What kept you going? What drove you to keep moving forward even though things weren't going your way?
Well, first is coming from nothing, right? And now we have 3 lovely, beautiful girls. So it's, I think, more on the motivation is more about them.
Yeah.
Yeah.
Beautiful. That's always a big purpose the driving factor of other people, I think. When you have other people you want to...
Plus, the fact that a lot of people have done it, so there's no way. The only way for you stopping is yourself.
That's right, yeah.
Plus, now with a lot of information out there, back then it's pretty different.
Well, especially 2019 feels like around the corner ago, but it's a long time ago, and data was so different. How you had to get the data was very different to today. It's so easy. Oh, it's easier compared to back then. I don't know, even before you started Suburb Finder, like 2017, that would have been even harder again to find the data.
And it's more, I'd say it's more transparent now, right?
So you've built, a Suburb Finder. I guess, what are some of the key metrics or things that you look at that help you kind of identify a hotspot or a place that's going to look like it's going to be moving in that trend?
Right. So I'll start with compounded annual growth rate of 10 years. Right. So a lot of people are saying, but that's already historical data, right? Which is totally true. Past performance is not a guarantee of future performance, right? But the reason why I use that is to filter out areas that was already proven underperformance.
So if they're underperforming, you start to knock them out. So if they're doing like 2, did you have a number? Like if it's under 5% or low, you say, nah, I don't want to.
Probably under 3%. Yeah. But of course, that's just one, right? So I'll overlay that with others, which I'll mention along the way. So a lot of things has happened already over the past decade, right? How many rate rise
I've lost count.
have we had?
Lost count. It's
and recession.
Yeah.
Right? So imagine that if a suburb during that time hasn't really increased up to now, then you'll be thinking, what's wrong?
Yeah.
Right? There must be something structurally wrong in that area for it not to grow, right? Compared to other locations.
Yeah. So that's one thing you look at.
Yeah, it's one thing I
For-
look at. Then next is the liquidity of the market. So when I say liquidity is the number of transactions or sales volume, because all the data that we're looking now or looking into now, they're all based on sales transactions, right? So imagine looking at an area and when you saw it, in 12 months, it has increased, median price has increased by 20%. It looked good on paper, but as you dig deeper, you only find out that there's only less than 10 sales over the past 12 months,
Yeah.
right? And if you do more investigations, you'll find out that, a couple of those 10 were renovated and then some were people overpaid for it. That made the median house price for that area skyrocket.
Yeah. Yeah.
So the data is a bit skewed.
And if it's a small rural town and stuff, like you see that all the time. I'm looking at data and I'm looking at what's grown and you see, like you said, you might even see like 40%, 50%, 60%, 70% in growth. And you're like, what the hell? And then you see it's like a town that's had small transactions and you're like, very few. And if there hasn't been many transactions, of course, it only takes a couple of transactions to change the median house price by a percentage by a click of a finger. So
exactly.
makes
And
sense.
this is not only for, what I noticed, this is not only for small towns, but for blue chip areas as well.
Really?
Because, let's say, if there's only less than 10, right, because of the price, right, then if one sale, let's say, if one sale is 6 mil and the one that was sold, the highest was around 19 mil, then, and only a couple, then
Yeah, of course. So you're talking like
median will be,
premium. Yeah. It's interesting. I was looking at a client. They were looking at Mossman Park in WA, which is like a blue chip area, and I think it grew 27% or 24%. And they were looking at buying a $7.5 million house, but she's already got a house there as well. I think 4 mil or something like that. Her house as well, but she's upgrading. She wants to go on the water, and then you're like looking at these prices, and you're like, okay, then there's another house down the road selling for 4 mil. Another one down the road selling for 10 mil. So it's like those transactions, especially at that high, and it does make sense. It starts swinging the market dramatically.
Yep. And that's where you guys come in as a BA, because you guys have local knowledge.
Yeah, you start looking and go.
So you combine data with local knowledge, right?
Yeah, of course. So that's it. You go historical trend over the last 10 years, what the average growth is.
Yep.
Then you're looking at the transaction of volume.
Yep. And then next would be the supply. So sale listings continues decline in sale listings, right? So it's as the supply becomes less and less, then perfect example is what's happening in Perth at the moment. Even if demand has slowed down, but there's still lack of supply, then we can expect that, Perth will still have its second
wind market, which we'll kind of touch on later on, I guess. But yeah, so if there is a lack of supply, and do you go off percentages or do you just go off a percentage of average over the last 3 or 12 months to show that supply, or do you go for like
I normally go for at least 5% over the last 12 months and then another 3% over the past 3 months.
Yeah.
So at least when you look at the trend on the graph, it's trending down.
Yeah.
Right? And then next is you overlay that with sales days on market.
Yeah.
As
everyone knows,
days on market is a good representation of demand. If days on market is decreasing, then there is pressure in the market.
Have you ever seen where you see sales listings dropping, you see the buying side or the transactions increasing, but then you see days on market kind of going up, but then prices are starting to rise? You ever seen?
Yeah, I've seen a lot of those. That's why when doing research, you shouldn't be, okay, I've seen that. Maybe I'll buy that. You still have to monitor where's it going, right? If for 2 or 3 consecutive months it has been increasing, continuously increasing, then probably it's good to pull the plug.
Yeah.
Yeah.
Okay. So they're your key data points that you look at trying to understand where the market's kind of heading.
Yeah. Well, there's more.
There's also
Yeah.
many.
Those are pretty much the basics, right? Of course, you have to consider as well population growth,
Of course.
development approvals,
Yeah.
infrastructure projects. Yeah.
I got a curveball for you. So if you've got the last 10 years has been flat of growth for that area, there's places that haven't grown at all. Do you think they can change, but because their cycle hasn't come around?
Yes. Then you have to look at supply,
Yeah.
right? If the growth has been relatively flat, even over the past 10 years, perfect example is what happened to Perth, right? So, because price is the byproduct of, right? Price only reflects after it happened already,
Yes.
right?
Yeah.
So it's a byproduct of, I'd say, how market sentiment, right? So how many people are looking at those for sale sections, right, of online listing sites? Is it increasing, right?
Yeah.
And then is it translating to days on market going down? If it's translating to days on market going down, then therefore people who are looking are being successful in buying. Right?
Yeah. Yeah.
And therefore sales volume starts to go up, and then little by little price started to go up as well.
Yeah. Because it's always lagging, isn't it? Some of the indicators aren't always. I find with days on market it's quite hard because I find sometimes a bit lagging where you got sales volume of how many transactions there is and versus sales listings. It's like what's there it happened that month has happened.
Yep.
And sometimes, the days on market I find like it can be a bit that's my take on it.
No, you're true with that.
Yeah.
Plus, the other thing to look at is rent, because when rent is one of the first signals that our market is about to move. Because if rents are moving, then people are more than willing enough to pay more rent. Eventually, it will shift into them willing to pay more when they buy.
Yeah.
Right. So that only means that they choose that suburb because it's desirable.
Of course, definitely. Yeah, it is a very common thing. You normally see that go first, and then everyone else starts running in and start buying all the stock up, and they start seeing prices. It's kind of a very common trend. With the data that you're seeing, what are you seeing from an overall picture, landscape of Australia, of markets that are seeing a lack of supply that haven't done quite well over the last few years that you think there potentially could be a place to look and target?
Oh, what do you mean exactly?
So, like over the last, I would say, since we started the company 2020, say 23, 24, we've done a lot of, I would say, damage in Queensland and WA and a bit of South Australia. There was just listings that there was already an undersupply of listing, and then you had the migration, you had the people migrating there, and you started to see sales activity increase. Have you noticed over the last, say, since 25 to 2026, seen a bit of a change in different parts around Australia that you see potentially could be a hotspot because this is an undersupply of property going off your data?
Well, what I can see right now is the regional markets are still undersupply, because looking at the data right now, the rest of Queensland, I'd say regional, right? It has increased by 17.42%.
Yeah.
Right? And then the rest of WA is 17.03. And I was surprised. The rest of South Australia is 15.74.
Decrease or increase?
Increase.
Okay.
Yeah. I didn't expect that when I was doing this, right? And then Perth Metro, Greater Perth, still 13.31, followed by Brisbane, which is 13.15.
So now there's more listings starting to come into the market.
This is the price.
Oh, price.
Yeah.
Okay.
Whereas Sydney is just 5.12.
Yeah.
And Melbourne, 1.64%. So if we'll compare that to rest of Queensland, which is 17.42 versus Melbourne's 1.64, 10 times more.
Yeah.
It has grown 10 times more
Doesn't make
in
sense.
terms of percentage, right?
Mm.
And the reason why to that is because the listings are still down. And the rest of the regional areas in Queensland is still affordable. That's what's keep pushing the demand.
Yeah.
Mm.
So you think there's still growth in some of these areas here, parts of course, once again, this is not financial advice, people listening.
Of course.
Because we would have to put this in. But just going off supply versus demand, I guess there's still less supply and demand is still there in some of these places of Queensland and WA and South Australia.
And affordability, of course.
Yeah. Yep.
Plus, the reason to that is the high cost of living we are in right now. You don't want to buy something that's already too negative because you're already having an issue with the high cost of living, and then you'll add more negative to what you're encountering at the moment.
Yeah, 100%. Have you seen people very negative towards regional towns? Going off what you've seen, field data and what you see, have you seen a very positive sign of that, or is it actually a true statement that some of these regional towns don't perform as well as capital cities?
Well, depends on when you say regional, right? Because I myself, I invest in regional areas, but I don't buy in region for the term that's very regional, like Broken Hill, those kind, right?
Mining towns and stuff like that.
Yeah, or single mining or single industry dependent. So when you say regional, invest on regional areas that are close to the CBD of the region or like a regional hub, I'd say.
Yep.
Right? Pretty much good example would be the reason why Townsville has increased, right? Because it's affordable and there's a lot of jobs in there. It's not highly dependent on one industry.
Yeah, you're looking at diversification of different industries, more jobs getting available, projects, the port upgrade, things that attracts people there as well. Next
Plus, Sydney siders who are cashed up can still afford it, right? And people local that live in the area can still afford it as well.
Was there things that you've seen on your radar besides what we've spoken about that also made Townsville's, made you go to Townsville because of these other metrics that you've seen, like, for example, migration or jobs or anything that you looked at as well?
Yeah. Because when we're talking about migration, there are two types, right? So internal and then overseas. If we're talking about internal, it's really more on people from the capital city moving to regional areas, right? Because of affordability. Right? If they can get the same, or probably not the same pay, or pretty much a bit lower, but definitely lower cost of living, then they go for that plus the lifestyle.
Yeah, of course.
Right? More relaxed lifestyle. And in terms of overseas, majority of the overseas migrants goes to the city or greater capital city areas.
Yeah. Yep. Isn't that don't affect property prices?
Yeah, and where was that? So I did a research on that because
come prepared.
Yeah, of course. Because it's not every day that I get an invite from you. So might as well be prepared, right?
We've had Gilbert, he's come all the way from Sydney to Melbourne
So
just for the show.
yeah. So 20 the influx of migration happened around 2023 to 2024, right? And imagine, like myself, I'm an overseas migrant before. Huge volume of that goes to the city because of the work, right? Capital city because of jobs and all. As I said, being a migrant, we don't buy in day one, right? We rent.
Probably takes you 5 years. I think the average is 5 years. 70% of overseas migrants takes them 5 years to then buy their first home.
So imagine that. So the influx of overseas migrants, 2023 to 2024, right? Back then, we already have a supply problem, right? So those migrants who were renting, as you said, it will take them 3 to 5 years. So when is that? 20 months. So imagine 2027 to 2028. Those people will be buying, right? We already have an existing supply problem, and those are waiting demand, right?
It's crazy. And during that time, roughly, what was the amount of people that came into Australia? Because if you've got a massive, I know that was probably one of the biggest intakes from memory of people coming in. And if you've got a massive influx of people and then you got all of a sudden, this already got a shortage right now, but like you said, you can't buy for another 3 to 5 years. Next thing you know, we've already got a supply issue. 3 to 5 years keeps going with the way we're going. We've got even more of a issue on supply.
Mm-hmm.
That then, in my head, just thinking about that, then we're just going to have even a more of a risk of prices are going to be higher, and then that means that prices are going to be much more extravagant than what they are today.
Yep. So it was 429,000 during that time. And that's crazy. 86% of that went to capital cities, Sydney, Melbourne, and Brisbane and Perth.
Yeah, crazy. So going off that then, it seems like, Brizzy's doing quite well and parts of around Perth as well. With the Olympic Games coming into Brisbane, we hear all this hype. Everyone's like, wants to invest there because of that.
The Olympic ferry.
What do you reckon? Do you reckon it has some merit to, maybe prices can keep going because of the Olympic Games, or you think it's more driven because of what's happening now?
Well, it's driven mainly, I'd say Olympic would be just the icing, the cake, right? And the cake would be the infrastructures that are happening right now. Most of the infrastructures was already planned, right? It was just accelerated when the Olympics was announced, right? Yeah. So, if I'd say highly likely that prices will still increase or continue to increase when you remove the Olympic brand.
Yep.
Yeah. But of course, not the whole Brisbane. There'll be pockets, right?
So you reckon there's pockets that you have to be specific with because some clients, some areas will not probably perform?
Yes, definitely. And
why is that?
Those areas that would benefit directly from the infrastructures that are happening. So from the roads, of course, it'll be accessible going to the Brisbane CBD. And what other infrastructure do we have? Hospitals, right? Or sports centers. Yeah.
Yeah. So
and schools as well, of course.
Attracting people there. Would you say infrastructure is one of your big key parts of looking at a market as well when it comes to?
Yes, it is part of it, and because it's majority of the metrics that we're looking at, these are all metrics that already happened. Right?
Yeah.
And there are only two metrics that I consider as future metrics: the development approvals,
yep,
right, and infrastructure projects.
Yeah.
But you have to be selective of what type of infrastructure projects you're looking at.
Mm.
Perfect example, if you're looking at a solar farm or a mining project, it costs billions. But if you look at it, if you dig deeper, only a few jobs will be created during and especially after the project, right?
Yeah.
Compared to a hospital.
New hospital
Expansion.
in Bundaberg or something like that, or Melton that they're doing.
Yeah.
You got
That'll
jobs,
be
hundreds and hundreds.
that'll be billions, right? So it will generate construction or tradies jobs, right?
Yep.
But at the same time, once that finish, it will still generate jobs to operate the
Yeah.
hospital, right?
Yeah.
Which is that will sustain the areas within that economy.
Yeah, and I think when you got a regional town, you got some of these projects. That's why majority of our purchasing is in a regional town. And I think because a hospital upgrade or a new hospital or a school or whatever it may be, or a port upgrade, like these things impact an area like that much more, I find, sometimes than a capital city, especially these days. Like a place like parts of Melbourne, it's already very established. If a new school comes in,
Yes.
or like it's not going to really change the property market too much in my eyes. Of course, it's more now supply versus demand, speculation market compared to a market probably for regional town that's attracting people to actually go there.
And what I notice on those regional areas, because of they used to be like transient corridors, like people just pass, right? But because of the infrastructures, people just, I'm going to stay here because of this, infrastructure. There's jobs, facilities.
Yeah, yeah.
So people just tend to, I'll just stick here.
Yeah. And there's a lot of beauty in some of these regional towns. Like you go Albury, Wodonga, it's quite nice. Townsville's got some, things that are very quite attractive. Toowoomba, Bundaberg. So like, I guess it appeals to some people. So some people might go, well, I couldn't think of anything worse.
Yeah.
But unfortunately, that's not how property works, is it? It's just,
that's why a lot of people are saying, I'm not going to buy in this area because I myself am not going to live in that. Like, yeah, you're not going to live in that, but other people would be willing to live on it, right?
It's crazy. It's the way of thinking. And I think that comes to us as well. We have to educate as well our clients too, to say, like, this is the reason why, this is the formula, this is what we look at.
Yeah, and the reason why you're investing, because you should look at the numbers now with emotions. Now with emotions, right?
Well, like it's crazy. Like you go in Melbourne, you buy something for $1 million, like it's probably going to rent out for maybe $600, $700 a week, maybe around there, maybe less or more, depending what it is. So like when you look at the cash flow and you're getting interest rates now probably 6.5 because of the rate increase, it's like 30 grand negative, maybe more a year. Doesn't make sense. So
I think it only makes sense when you're really high earner, right?
Correct. Oh, yeah. And people want to, use the negative gearing tool
to
offset. But still, to me, that doesn't make sense.
But, how many percentage of the population is that?
Yeah. We're talking about a very small minority, aren't we? So you've seen Perth now has moved into that trend of, I call it like a second wind kind of market. Is that what you've seen as well with the data as well of the change? Because it had a bit of a slowdown and everyone was getting a bit scared saying, it's going to do what it did last time.
Yeah, but now it's going to be more selective in terms of not the whole Perth, but also the regional Perth. So some of them will be spillover to Armidale, right? Because people who can't afford anymore on the inner suburbs of Perth, then they'll tend to move out.
Yeah, it's like a ripple effect that happens.
Yes.
Yeah.
Again, it goes back to affordability.
Well, you're seeing that here in Melbourne as well. So it's very similar. It's not having a second wind like Perth is, but you look at like Frankston, I think it grew 20% last 12 months. Frankston was very affordable. I think $750 you could buy a house for at the start of last year. And now you're looking probably, it's 20% more of what it is now. So like it's close to $1 million, you're buying a house in Frankston. And I think that's just because of affordability. Because you go inner ring Melbourne, everything for a house of, 600 plus square meters, you're looking maybe 1.5, 2 million plus. And that doesn't make sense. And then for homeowners, it's like, let's move further out. And it's similar to what's happening with Perth.
Yep. And the thing is, later on, it will, you know, it will still balance, right? Not necessarily like leveled playing field between areas, but if the difference is only, say, 60 kilometers outside Melbourne CBD, right? And then if the difference on that versus to 30 kilometers within Melbourne CBD, if the difference is 100 grand or 150,
Yeah.
what will you do? Right? So then you start to consider again looking at within the 30-kilometer radius.
Yeah. Yeah. And that's kind of happened in Sydney, hasn't it? Really, very similar. So you think Perth still has a bit more room to go with the market, where by the signs of what you're seeing with the data?
Yes,
it looks
because
like,
the supply is still continuously low, right? It hasn't really recovered, even though the demand has decreased. So let's say even if it has decreased by 20%, that remaining, so we still have 80%, right? So the current supply right now, still not enough to compensate the 80% demand.
yeah.
So
It
that's
just makes
what's
sense.
happening. But you have to be selective in the area that you'll be buying as well, because it's not like last 3 years ago that, you know, put a blindfold on, throw a dart on the map, then everything's a winner.
Yeah.
Right?
That was crazy back then, wasn't it? Literally, I think 96% of regions had double-digit growth back
Yeah.
then. So like this will winner's chicken dinner, whatever that saying they call it. But now that's changed.
So gone are the days.
Yeah, I call it the golden days, 2020, when we started buying. I remember buying in like Elizabeth, Rockhampton, Townsville, Toowoomba, and like, of course, we're very new, we're doing what we're doing, but then those markets kept continuing.
Mm-hmm.
But like, I remember we bought a property in Elizabeth for like 240,000. 600 square meter house, block. Sorry, it was a house, 3 bedroom. Nothing. It was basic. It was nothing crash hot, but didn't need a renovation or anything. Now the house is probably worth 500-600 grand, I reckon. And same if goes for Rockhampton, 270, 280k houses, and now that's probably close to 500-600k.
Same story with Shepparton.
Yeah.
I used to, you can still buy 200 back then.
Yeah. So it's all changed. What's your take on Victoria? We've got, everyone's worried about land tax, government policies. You think Victoria can change and maybe become the new Queensland, or maybe potentially the new Perth?
Well, apparently it's, if you look at the price, right, Perth already overtaken in terms of price, or I'd say not much of a difference anymore, right? But especially compared to Brisbane already overtook in terms of price, right? Melbourne. I'd say if the supply continues to go down, right? One thing that I can see is people probably, if that's the case, that people wants to, move out of Melbourne because of the policy, land tax and all, we would see that directly to the number of listings, right? But sadly, we don't. It's still, supply is still lacking. It could be that they're extracting, instead of selling, extracting equity and then buying somewhere.
Yeah. Well, we've seen it. It's on the ground with some parts of regional and in the like outer ring of Melbourne.
Yeah.
There, you're seeing it. There's this a shortage still, and it's getting worse and worse and worse. And I think if it keeps continuing, I think we're going to see probably a boom market in the next 2 to 3 years.
And that 1% that I've said a while ago, that's the aggregate for Melbourne. Of course, there will be LGAs and suburb that have increased by double digit in terms of percentage, right?
Yeah.
In Melbourne. So I'm pretty sure there are pockets within Melbourne that will definitely perform well.
Yeah.
It's just hard to aggregate it because it pulls everything.
Every single
Yeah.
LGA. It's, when you look at Melbourne or Sydney or Perth, it's you're putting on all these suburbs and LGAs. It starts to manipulate the numbers.
Yeah,
Yeah.
it's that's how I'd say different media outlet. Wow, it's Perth is booming or Melbourne is booming, but not all Melbourne or all Perth.
No, you definitely, by the sounds of it, from what you're saying is you have to be careful of where you're actually buying, because it doesn't mean if Melbourne or Brisbane's booming that everywhere is going to do the exact same.
Exactly. I mean, it's like saying that the whole market's moving at the same time, right? It doesn't.
Yeah.
Right. So it moves in different waves.
Yeah.
Yeah.
Okay. So what's your prediction or outlook for the next 12 plus months of Australia's property market when it comes to, potentially what you think is going to be a place, maybe contender or for a first time investor, or places that are going to keep booming in value? What's your take?
Well, I'd say it will keep on increasing. The only way that it won't stop, the only way that it will slow down is recently APRA did a recent change in the lending, and then we have this policy 5%, and then so depends really on how APRA and the government will play it out, right? Because whatever predictions we come up with, by the way, we can only make assumptions based on supply and demand, but we can't really put a number on it, right? And I think the longest that we can say that this is likely what's going to happen is within 1 to 2 years' time. Anything beyond that, we're really pushing the crystal ball.
Yeah,
right?
Yeah.
Plus, within first year up to second year, that will depend on what policies will the government come up again.
They might introduce something else. Bloody
Because
another tax.
When did they introduce the 5% 3 months ago?
The deposit scheme.
Yeah. And now we can see it's already reflected on the increase in median house price, right?
It doesn't make. I don't know what they're thinking when they actually that's another conversation for another day. But maybe we can. I don't know what they're thinking. Like, it's not. They think it's going to reduce house prices or gets people in the market. It actually just pushes up property prices, and it's happened time and time again, because it's not like the first time they've done this before as well, isn't it?
Yeah, it's not the first time.
So
all I can say is the problem really is until we solve the labor the materials, the cost of materials, and then the tradie or labor issue in the construction industry, will continuously have a supply issue.
Yeah, and I think with Victoria being, there's a bad rap with Victoria, with the government and everything like that, land tax, which I'm very bullish on it, because there's a lack of builders, and no one's building properties as much as what they used to before COVID.
Yes.
And like you've been saying, if it keeps going like this, which it will, there's going to be an undersupply of property, and it just means property prices have to go up.
Yeah. And then the previous batch of people who migrated will start buying, and then with the continuous...
There's your crystal ball.
the continued increase of migrants, right?
Yeah.
Plus, that no tradies, no one wants to build. It will just put more pressure on the existing stocks that we have.
Yeah, exactly. So it's quite it's very interesting for the next 12 to 24 months. So, I think we've spoken a lot. I think if people are listening, probably want to grab it. They're probably listening with a pen and paper, because I think there's a lot of golden nuggets of what we've spoken about. I think the future looks bright as an investor. Maybe not for homeowners potentially, because it might mean that prices might just increase. But I guess if you're talking to a first-time investor or someone that was wanting to invest, Gilbert, and they're listening to this, What would be your piece of advice when it comes to investing and looking at the information or the data to help them make an informed decision? Anything that you would want to give them?
I'd say it doesn't hurt to get educated, right? If you want to, get educated, if you want to invest on yourself first, just like what you did when you're buying property. And if you have lots of time on your hand, get educated. And if you think you need a helping hand, that's the reason why professionals like you guys, buyer's agents, are there to help them. Doesn't hurt to ask help, right? Especially, you guys do this every day, right? I guess and before doing anything, talk to your brokers.
Yeah, definitely.
Because it doesn't make sense looking at areas only to find out that you can't afford.
Yeah. Yeah.
So that's the first step. Talk to your brokers, ask what you can afford and what you can't, then define your goals, and get educated and get help whenever you need.
Best advice you can get is always get a team around you.
Exactly.
But I think the best part there you said is invest in yourself first by educating. I think a lot of people don't do that. And it's good to go and lean on people, but I think where I fell into the trap when I was younger is that I leant on someone, I didn't understand all the intrinsics, and then I got burnt, bought a property off the plan, went backwards in value. And I think then after that, I started researching, I'm like, that was the stupidest decision. So I think that's probably the most important part there. Invest first in yourself. Understand enough to know if you're getting, I don't know, bullshit's being lied.
If you're getting ripped off.
Or you're getting ripped off and you just, So, love it. Is there anything else that you want to say to the viewer?
No, I think it's all.
That's all. Yeah. Well, thank you for coming on. I know it's a long way for coming from Sydney to Melbourne, but appreciate having you on the podcast, and hopefully we can do it again soon.
Yeah, definitely. Just let me know.
Will do. Thank you again.
All right. Thanks.